Good morning. Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Altius Minerals. Altius trades on the TSX as ALS, Alpha Lima Sierra, and as ATUSF on the OTCQX. That would be Alpha Tango Utah Sierra Foxtrot. Hope you'll enjoy today's program. It will also be available in replay mode. Do feel free to chat in your questions in the question pane of GoToWebinar, and we'll ask the questions in real time. I'm looking forward to them. Just shoot them in. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. And this event will be available in replay mode about an hour afterwards, and it'll be up almost immediately at amvestcapital.com/webinars. amvestcapital.com/webinars. Everything has a disclaimer in the world, and we do too. This call is most definitely for informational purposes only. Jumping into the program, we're very pleased to have with us today Brian Dalton, who is the president and CEO of Altius. He's an entrepreneur extraordinaire in the mining industry and has built a successful group of private mineral exploration and exploration service companies prior to co-founding Altius in 1997. In his 20 years at Altius, he helped grow the company to an asset base in excess of $500 million through diligent implementation of the prospect generator joint venture model and royalty acquisition / creation. He's also the chairman of Adventist Zinc Corporation. Following the formal presentation, again, members of Amvest Capital will ask questions of management, and we hope that you send in your questions as well. So Brian, if you want to turn on your webcam, we'll get started. There we go. Welcome to the show.
Well, thank you for having me back again.
Good.
I don't know about entrepreneur extraordinaire. I think there's lots of people who might argue with that one, but I'll take the compliment. Maybe we can just go in a couple of slides here. Here's our disclaimer. We've got one too. So to start off, just wanted to recap briefly how Altius is structured and what its major exposure areas are. We own royalties on a number of mining interests and now also indirectly royalties on renewable energy projects, mainly in the US. We were really busy between the period 2014, say in 2017-18, when the mining industry was in a big downturn, and our capital turned out to be quite valuable in that period of time. So we did a lot of M&A and built up a portfolio of assets. There's four main planks that I see to our royalty level exposures today. The first is through our interest in Altius Renewable Royalties Corporation. So this is a business that recently went public on the TSX, and Altius is the controlling shareholder. It has a joint venture with Apollo, and it's basically royalty financing the renewable energy sector. And this business was built from we used the revenues from some coal assets that we acquired a number of years ago that were in decline and being phased out to reinvest into the renewable energy sector, and I'll talk a little bit more about that as we go through. We have exposures to a number of copper, nickel, lithium, cobalt, zinc mining interests in different parts of the world. These, from a thematic perspective, are all in very strong demand and expected to go into much stronger demand based around largely on electrification thematics. We hold interests in the major potash fertilizer mines that are located in Saskatchewan, Canada, ultra long life assets, and these are important to a more sustainable world because when you use more potash fertilizer, you gain more food production per unit of land, and you essentially can limit deforestation as population grows through their greater usage. And then lastly, we have royalties on iron ore interests that are located in the Labrador Trough. These are very particular types of iron ores. They are high grade, low impurity, and their role in a more sustainable world is due to the fact that when you use them in steel making, there are far less emissions that result through the process, just because it's cleaner and pure forms of input. Next. A very important slide. It really goes to one of the key differentiators of Altius. When we look to acquire interests in projects at the royalty level, one of the things we're always looking for are very long resource lives. And that's because we use it as a guide towards some of the free embedded optionality that is so important to the royalty model. In the royalty model, basically, one of the key benefits is that you are a beneficiary of any capital investments by operators that lead to life extensions or expansions without a share of the capital cost. So it creates a real outsized type return in those when those kinds of events happen. So against 2019 revenue levels, I guess we could probably update this one a little bit now. The weighted average remaining life of our various exposures, and you can see them here, they're grouped by the different buckets I would have just described in the last slide. The remaining average life is about 122 years. So this is a great predictor, as we said, of future option value realization. And what's interesting now is that we're into the kinds of conditions generally, certainly in the mining space and also in renewables, that incentivization is there. So we're in a circumstance where mine operators, for example, are making strong cash margins, prices are up. There are loads of different forms of capital available to the sector. And so this is the type of environment where you'd expect to start to get those announcements from operators about capital investments in existing operations that will, again, either extend lives or grow out production rates over time. Don't look to Altius at this point for M&A type growth. Won't absolutely preclude it. There may be special situations, but we're at a stage now in the overall commodity cycle where the growth should really start to come from the assets that we've already acquired. So that's a segue into this slide. The chart here is basically our interpretation of the resource commodity cycle, if you will. It shows that the timeline is the entire history of Altius, so almost 25 years now, going back to 1997. We started in a downturn, and then we had, say, from 2001 to 2015, 2016, a very powerful cycle, often called a super cycle. The downturn through 2015 or whatever it was until now was a really important period for Altius. We went into that downturn having made a lot of profits in the previous upcycle, and we sat on those profits until conditions came our way, and then we got very busy deploying. So all of the little stars are basically acquisition points. This is where our portfolio was built and created, and you can see it's identified by the various commodity investments that we made. And now we believe we are into that next up leg of the current cycle. Whether it turns out to be a super cycle or not, I guess it remains to be seen. What I can say is that from the supply side, it's now been about 11 years since there's been any meaningful investment by mining companies into the either replacement of or creation of new supply. So we've come through a very long period of no investment in new supply. Meanwhile, these mines have been depleting or getting into more difficult parts of ore bodies. It's just what naturally happens over time. So that's the supply side, which is obviously very constructive. And on the demand side, well, I should back it up, I suppose. A normal cycle happens when there hasn't been when there's a long period of very little supply growth. So that's just a cyclical lack of investment in the business, which leads to supply shortfalls, and you get a normal cycle. A super cycle happens when that happens to coincide with an unexpected demand surge. In the 2000s super cycle, that demand surge came from urbanization in China, and it caught people off guard in terms of its intensity. So you had extreme demand at a time when supply was quite strained. Those that are predicting another super cycle are basically counting on the fact that post-pandemic, the amount of economic stimulus that's being directed towards infrastructure generally and towards green infrastructure particularly will cause another of those surprise demand surges to coincide with the weak supply periods. Next. This is the manifestation, I guess, of what I've been talking about. The market cycle has turned, obviously. At the bottom of the cycle, prices were below what was required for any type of incentivization of new growth, and in fact, a lot of production, existing production, was loss-making. So that's reversed itself. In some cases, I think we're at prices where incentivization conditions have been reached, and others were obviously heading in the right direction. From our perspective, having been buyers through the downturn at prices that in many cases are half or less what they are currently, we are now starting to see that show up. We had a record quarterly revenue result last quarter, largely on the strength of these improving commodity prices. Next. Yeah, just to illustrate that. So this is the result of that period of M&A going back through 2014. Generally steady build up and a record in the previous quarter now that the price side of the equation has really started to kick in. Next. Won't belabor this slide, but it basically goes through those acquisitions that we made, that we've made through our history on the royalty side of things. It gives the purchase prices that we paid, and the amount of cash flow that they've delivered so far relative to remaining net asset values as analysts out there identify. And you can see that across the board, excuse me, that counter-cyclical investing approach has been working quite well, and we could monetize the investments that we've made, not that we're intending to, but we could at multiples of what we paid for them only a few years ago now. I'll particularly highlight the bottom two rows. There's one loss-making investment here, and that's the coal portfolio. Soon after we bought that, regulations changed that caused the expected lives to be considerably shortened, and that caused us to take a write-down on the investment amount. But I'm very happy to say that rather than just throwing in the towel or passing the buck and divesting, we took a different approach. We decided to reinvest whatever remaining revenues would be coming from those phasing out coal assets, and to use it to try to rebuild with something that would be much more enduring. And we chose to innovate really the creation of renewable royalty financing within the renewable energy sector. And it's taken an amazing amount of work, but again, it's culminated now last year with the joint venture with Apollo, several transactions on the ground, and most recently the IPO. And I'm happy to report that today the value that Altius Minerals holds of shares in its subsidiary Altius Renewable Royalties eclipses the amount of the write-downs we took on the coal side. So we feel very happy to have fought that back in its entirety and then some. Next. So on to Altius Renewable Royalties. It went public just a couple of weeks ago. Altius Renewable Royalties essentially it owns a 50% interest in a US-based operating subsidiary called Great Bay Renewables. It has its own expert management team and whatnot. Great Bay is held in a 50-50 joint venture with the infrastructure arm of Apollo. We've made two major investments to date in two private renewable energy developers in the US. And the way the deal works essentially is that we are backing their entire portfolio of development stage projects. And as these projects are sold on and reach commercial production, royalties in our favor are attached. So that's been working quite well. To date, we have received royalties from projects that total about 1,100 megawatts, and we expect several more stemming from those existing investments. I can tell you right now that these developers report that demand for their projects is at unprecedented levels. And yeah, so we're seeing lots of opportunity for more royalty creation during the coming year, and also more opportunities to deploy with other developers, and including investing particularly at the more advanced stage project level in certain circumstances. Next. So switching now to an often overlooked part of our business, but not overlooked by us, I can tell you that. It's what we call our project generation business. And essentially, this is the exploration group within Altius. It's another differentiator in that we don't just buy royalties. We go to work to try to create them as well with a much longer term approach. So we'll generate our own mineral exploration projects, and through various corporate transactions, whether they're spin-outs or joint ventures, move them on to other companies, taking back or holding back a royalty interest and equity interest. So the new companies that take over the projects basically are responsible for funding and advancing the projects. So none of that's borne at the Altius level. We retain royalties on the upside as well as equity participation in any exciting discoveries that they might make. So same cyclical chart, and again showing the same sort of cyclical pattern. The green bars here would be a number of projects that are being vended out of our system overall. So again, countercyclically, we were building up lots of projects as the market was turning down from, say, 2012 to 2015. And as things started to get a little bit better and capital returned selectively to the sector, we've been very successful in moving those projects out, and it's resulted in a portfolio of 20 or so very well funded, very well managed junior companies that we're large shareholders of, that we believe hold great promise for us both at the equity level and probably more importantly from a long-term perspective at the royalty level. So next slide. And just to give you a sense of how strongly this part of our business is performing, in the past year, it was obviously a much better year for the junior mining sector. This portfolio of companies collectively raised over $150 million for the advancement of projects that, for the most part, we have royalty interests in. They've announced plans subsequently for about 180 kilometers of drilling this year, either focused on pure exploration or delineation of existing resources. And to put that in context, so that's all free optionality to us. All of that exploration drilling comes at no direct cost, but of course, if something good happens there, we are the beneficiaries both at the equity and the royalty level. And to put that much drilling in context, it's actually hard to fathom, but if you were to lay it out end to end, you would have to walk the equivalent of 4 marathons just to walk by it all and view it. And that's what's coming in 2021. And it's all free option value for an Altius shareholder. So a very exciting part of our business. Won't belabor this slide, just to make a few key points here. Revenues have obviously been growing. Last year was a down year for obvious reasons, as early year prices and also some production curtailment took place on COVID related issues. But we did actually have maintain a record of growing operating cash flows, which is probably an even more important measure. Over to the balance sheet items here, a couple of key things to point out. Our market cap today at about 630 million, and balance sheet, if you add up the debt versus the cash and public equity holdings, cash has been building, value of equity holdings has been growing. We have now moved into a negative net debt position on that basis. Next. So there you go, nice and short and tight. So anybody would like to ask any questions, please go ahead.
Excellent. Thank you, everyone who's sent questions ahead of time and just here. We'll jump right in. Regarding the Voyager lands and JV with Bitterroot Resources, given renewed interest in nickel and in particular supply sourced in the US, is there any progress on farming out the Voyager lands to one or more partners? And when did Altius sell its holdings in Bitterroot?
First, just on nickel more broadly, we do have an interest in the Voyager lands as well as a number of other areas. So there are things, it has gotten quite busy there. There are deals afoot, if you will, to see those projects all go out into strong hands as market conditions get more permissive. As far as the particular holding on Bitterroot, I don't actually know the answer to that. You can imagine we've had as many as 40, 50 positions at one time in the company, so I couldn't tell you specifically when that was divested or even if it's all fully divested. But yeah, as far as the actual Voyager lands that we acquired through Bitterroot, I do expect that in the near term you're going to see a lot of activity happen there.
Gotcha. Regarding Orogen royalties, does Altius have any comment on the recent corporate developments there regarding, I guess, some personnel changes and cancellation of a private placement? And I guess if you could just address the situation there.
Look, the management of Orogen definitely has our full support. In fact, it's not hard to find, but we've been adding to our position. They were on the tail end of some of the issues that have gone on in recent weeks there. Really love what Orogen is doing, both on the project generation side. Love the exposure that we get to their Ermitaño royalty, which is rapidly heading towards production, and certainly to the potential of some of their earlier stage royalties. And I'd highlight one in particular. There's a pretty strongly rumored discovery that's been made on one of their projects by AngloGold Ashanti. I can't confirm it. I know AngloGold at one point called it a discovery. That's as far as they've gone. But again, if the rumors are anywhere near close to true, it's pretty exciting. But overall, no, it's just a long-term hold and a great project generator who's adding new royalties.
But
and
his tail off
we're
was,
still
his closing comment was, this seems like there's nothing to be concerned about for common shareholders. So reassuring. Did the mechanics of the ARR spin-out mean that Altius shares have been discontinued by a proportional amount?
Have been discontinued. So
by
basically,
a proportional amount.
So basically, what's happened there is that post IPO, Altius will own around 60% of the shares of ARR. So around 40% has just been sold to the public. And the flip side of that is that ARR now has $100 million Canadian in cash that's been added to its treasury. So obviously, yes, our percentage ownership has gone down, but we haven't been, any dilution has been offset by cash and the opportunity to deploy that capital.
Okay. What are the average royalties that you receive? Because there are several ways to interpret that question.
Wow. Yeah, it's quite a mixed bag, from pretty heavy duty large ones like Chapada and through our indirect holding in IOC, which would all be 10 to 20 million depending on where you're doing on commodity prices, down to some of the smaller potash royalties, which would number into hundreds of thousands. But even there, you've got some that, as a whole, that's it's a collective fairly meaty portfolio.
What percentage
the whole gamut
are cash flowing and what are not?
I don't actually know the number in terms of percentages, but there's 14 that are cash flowing right now. What I put in what I'd call the development stage, or projects that could potentially get funded in the current cycle. There's 3 to 4 there, and there'd probably be, I don't know, 60 to 100 of earlier stage royalties in the business.
How well received is the dividend reinvestment plan? What percentage of shareholders take advantage of it?
Flora, I don't know if you've got audio for this, but that'd be more of a question for you.
Yeah. You guys can hear me, right?
Yes.
Yep.
I mean, it's fairly new, so it's only been going for, I guess, 3 quarters now, coming up on its 4th quarter. So it is roughly so far around 4% of shareholders. And I would say, just from shareholder comments on it, it's fairly well received, because a lot of shareholders have tried to sign up for dividend reinvestment when their brokerages have offered it. And this allows them to sign up and get the shares at a discount, a 5% discount. So I'd say it's fairly well received.
Is Altius Renewable planning to pay a dividend?
I expect so, but it's a ways out. Like Altius Renewables Royalties' job today is to scale up its business, to deploy, to grow. So for now, we'd look to reinvest proceeds in just making that business. It's got a first mover advantage. It's the first utility scale royalty business ever in the renewable sector. As time goes on and cash flows build up, I think a dividend is certainly part of the future, but it's a growth story right now.
What are the plans for the cash position in the next year? Any use that is there any use that has your specific interest?
I guess that question goes to Altius Minerals, and it talks to capital allocation. So over the past year, put it that way, a lot of the focus was on building up the Altius Renewables platform. So that was the bulk of our capital allocation work in the past year. With the spin out of ARR and its own public listing, that that emphasis subsides now. I already mentioned though that there's limited. You never know, but like we're not feeling aggressive on the royalty buying side in mining right now. It just doesn't feel like the right part of the cycle. So the priorities that I can see going forward are continuing to pay down the debt from the acquisitions during the previous cycle, although even there, we don't feel overly pressured or overly levered at this point in the game. There's a pretty important strategy session coming up within Altius here shortly around as we go into this next part of the cycle, how we want to prioritize our capital allocation. But one thing I can, I guess, be somewhat leading around is that returns of capital are certainly going to be high priority there.
Right. Thank you. Gabe?
Sure, thanks. That was actually a question I was going to ask around, commodity cycles and current price environment. So we would kind of venture to guess that it makes things harder when prices are higher to get the deals done that you are trying to target in terms of IRR or levered yield or unlevered yield.
Yeah, and look, we just let the cycle work for us though, and there's a time when royalty financing is very, very attractive, and it's in the best of times, if you're in our business, you even come up on times when there's no other forms of capital available. So that would be that 2015, 2016 period when we're buying, copper streams when copper was at $2 and there was no other capital in the market. Like that investment, we're making 20-odd% annual yields on it now as a result. But take it the other way. Imagine we buy a copper stream on an asset at $5 copper late in a cycle. Well, what you can expect during your first number of years of trying to generate returns in that asset is probably falling prices. So it has huge impacts as far as what your expected IRRs should be. Again, we're not dollar cost averagers here. Our bets were put in from an M&A perspective very aggressively when nobody else was making them. And now we're at that point where we're getting the benefits of the better prices showing up directly into royalty income. But I get far more excited thinking about what this better environment does as far as incentivizing operators to grow the existing assets that we have royalties on. Don't worry, there'll be lots of opportunities in the future to build through acquisitions again. if there's one thing that's certain is that the mining industry at some point will blow itself up again. Like, that is absolutely certain.
Sure. So in terms of, I guess, capital deployment, you kind of mentioned you're going to have a session here shortly to discuss it. But in terms of any sort of major expansion or development of any project in the portfolio, can you point to one or two?
The easiest one is on the potash side. So you've got good demand growth happening for potash globally right now. And what's really nice about that one is, or that portfolio, is that as that demand picks up, the operators of the mines that we hold royalties on pretty much control all of the spare capacity in the world today. So they pre-invested in extra capacity across their portfolios. So Nutrien and Mosaic, the counterparties across that portfolio, could notionally increase their production rates from last year's levels by over 50% just to reach existing nameplate capacity. So that's the first thing to look for here, is to watch as demand for potash grows for those utilization rates to fill in from those investments. In potash, you don't get to just, do little incremental investments at the time. It's very capital intensive, very long lead items. It can take, 7-10 years once you make an investment decision to actually get the capacity available. So that was done. The other one that's well communicated is our Chapada asset. So Lundin acquired that from Yamana a couple of years ago. It's a copper gold interest, so it's moved now from our mine. So it's moved now from a copper focused company or a gold focused company to a copper focused company. And Lundin was not coy about saying that they're, one of the key objectives in making that acquisition was to expand the operation. Resources have grown considerably there over the past couple of years. So they've signaled, well, not signaled, but they've identified that they are in the process of evaluating expansion opportunities at that mine. So that would be a huge benefit to us. IOC, the iron ore mine, Rio Tinto, it's becoming more important to Rio Tinto as quality deteriorates for their Australian production. They've started to have to use more IOC production to blend up the quality of the Australian ores. And we just noticed that there was a pretty substantial increase in capital investment there that's growth focused for the coming year. I could go on and on, quite frankly. This is the time. These are long-term good assets that have great cash cost positions, and incentivization conditions are getting there. So they're either announcing that they've already made decisions or they're completing studies about how much to invest and how much to grow these businesses.
And in terms of expanding your royalties on those particular assets, would you be amenable to reinvesting in those plays?
We would, but why would they? Like, why would Nutrien at this point? They're making huge margins. They've got other forms of capital available. Why would they sell more royalty interest? Lundin, it's making fantastic margins at that operation. They could fund any expansion I expect from cash flows. Why would they sell a royalty at this point? It's my point. So unless you really want to pay up and accept very low over full cycle IRRs, that's just not the time.
Sure, fair enough. In terms of diversification across commodities for Altius, how do you see exposure there, and are you directional in any particular commodity?
We are. What we set out to do, when at the peak of the last cycle, we had a bunch of cash that we'd made, and that was when we made the decision that we would use it to acquire more cash flowing royalties to sort of augment that earlier stage portfolio. And we knew it wouldn't be the precious metal side because we felt that was well served. But what we set out to do was to try to provide investors with an alternative to owning, say, a Rio Tinto or a BHP or diversified mining company, to give a royalty level alternative. So we're essentially trying to emulate those portfolios. And what we look at are what's the broader traded value of the various commodities and what are our expectations. And we stick to the larger, more widely traded ones for the most part. I would say that right now it's actually fairly well balanced. A few things we might tweak here and there if we could, if the opportunity came along. But I really like what we present now and how we, cover everything from copper to iron ore to potash to the base metals to bulks, and everything really that we've got today is set up such that it's very likely to benefit from some of these big demand trends that are out there right now. One that probably stands out might be that we don't have exposure to, and I don't know if we ever will or can because this is a different kind of beast, would be aluminum. But other than that, we're a pretty decently diversified basket right now of all the things that make the world go round that come out of the ground.
Would you ever look at hydrocarbons?
No. We're coming off coal, and our energy bet is decidedly on the renewables front.
Understood. Okay, that's all for me. Campbell?
Sure. Institutional shareholders?
Yeah, pretty broad-based these days. I mean, we've undergone a shift over the past 5 or 6 years when it would have been more resource-focused funds. Those were decimated through the downturn as well, and we actually don't have very many on our ledger right now. But the number of value funds and generalists that we picked up over the past 4 or 5 years has been pretty substantial, and we'd be certainly our holding right now would be, I don't know what the percentage would be, but heavily dominated by generalist and value type institutional investors.
What is the typical or minimum IRR target on royalty purchases?
What part of the cycle are you looking at? Because, if we buy something in 2016 at $2 copper and we plug in $2 copper, well, it generates a certain IRR. If we take a full cycle view that we're buying copper at $2, but our full cycle view is that the price is $4, well, guess what? Our IRR just went up. We just let the cycle do the work for us for the most part. But we're, to be competitive, put it that way, when you're competing with other forms of capital at any one point in time, we're looking for base case high single digit type returns, and then through these long lives and all the option value to get decidedly into the double digits. And the other discriminating factor is that we only do that when we're comfortable that the prices that are being inserted are at least below mid-cycle, our expectation of mid-cycle prices.
What's the typical minimum IRR target on a royalty purchase?
Yeah, I guess we just.
I'm sorry. What kind of royalty on investment is typical in your renewable investments?
The 2 investments we've made to date are actually in the portfolios of developers, and one was 30 originally, and we've upsized it to 55, and the other is a $35 million investment that's with Apex. But there are options built in there for follow-on investments as we go forward. As we look at add more probably later stage projects to the portfolio. So here we invest in earlier stage, not built projects. We get royalties each time a project is sold. And we're also starting to find opportunities to invest in projects that are, say, at construction stage. And there, I think the ticket sizes could go up a bit.
Talking about yield, what would you say is the typical unleveraged initial yield on the renewable portfolio?
For these development stage investments, we're dealing with high single, low double-digit returns, because again, the capital we're competing with is for developers, private developers. So, development stage generally comes with a higher risk. So that's the competing cost of capital that's out there that we're dealing with. It would be lower if we were investing in projects that were at, say, construction or operation stage. But the key here, don't forget, is I know returns can look quite low in a lot of the renewable sector. There's just so much money chasing these fully bedded down operating, prices all locked in projects. But one of the ways that we get an extra benefit is through the long-term history of the projects. We get any benefits from future life extensions or expansions or all of the nice things that happen that I talked about already in mining. Those are probably more profound in the renewable space. So whatever the base case return is, we believe in the fullness of time that those returns ultimately do get ratcheted up. I talked about long life resources in mining. Well, guess what? These resources never expire.
Stepping back a bit, what metrics should one use to value a royalty company, and what is you think is unique? What kind of edge does Altius have? And actually, to that, do you think this renewable space will become more competitive, like with the gold royalty space? There seems to be a royalty company popping up every day.
Yeah, and we're hearing about new renewable energy royalty companies forming. There's some private equity groups we think that are, sleuting around trying to figure out how we do it. I suppose in one way I'd be disappointed if we didn't get competition here, but we have first mover and we're working it pretty hard at this point. Metrics for looking at royalty companies, I think the main one for investors, well, it depends on your time frame. If you're a long-term investor, which if you're a royalty investor, you should be, net asset value is going to be the better one because it captures the longer tails better. And knowing that those long tails don't require capital investment from your business to actually bring them to fruition, you get all those upsides for free. I've seen situations where, you get royalty companies that have that really emphasize, say, trading on more short-term revenue type multiples. But I've seen loads of circumstances out there in the market where companies with royalties on mines would say 10 times or 10 years trade at 15 times annual income. So beware of that stuff.
Want to thank everyone for tuning in and for some of your many of your great questions, and it's always great to have a visit with Altius, and we'll be queuing you for your feedback. Please send us a few lines. It'll get to Brian and his team in short order, and you can catch a replay of this event in about an hour at a few places, but easy to remember, amvestcapital.com/webinars. Click on replays. So it'll be up there. And with that, I'll pass it back to you, Brian, for to close. And we can always buy a stock another day. Why buy now? Why would we buy Altius right now as a stock?
Because of what we've been doing for the past 10 years, getting ready for this day.
Paying dividends, not literally and figuratively. So thank you, everyone. Thanks, Gabe. Thanks, Flora and Brian. And we'll hopefully have another visit this summer. Take care. Bye.
Thanks, everybody.
Bye-bye.
Great questions, by the way. Cheers.
Excellent.